Jeez.
And I had multiple tabs open on each one of these screens, and yeah, things just got lost during the webinar. But let's talk about the universe list first. So you had a question, Alberto, and the question that you had was, I run multiple screens. Why not just build all these screens into one giant screener?
Exactly.
So if you were able to do that, and if it were able to be effective, it would be good. But the problem with having too much in one screener is that you end up filtering out everything. So each one of these screens that I run is a specialty screen. Some of the things that pass one screen don't pass another screen, and vice versa. So I could either eliminate criteria, and that would open the floodgates, or I could put all the criteria in, and then nothing would ever pass.
Right. Okay.
So that's why I have multiple screens, and each one is looking for something specific that I'm interested in.
Okay. But at the end of the day, when you construct your universe list, it is basically all the outputs from those 7 or 8 screens. You put all that into one list.
For the most part, yes. Every now and again, I'll run a screen and something will pass the screen, but it's not good enough for the universe list. For example, let's see if we could find one on one of these here. Oh, well, like this, right? So, this passed, but the deep view rating is 70, right? So I wouldn't add this one. Now, this filter, yeah, there's no time bound rank, right? So it's not where if something IPO'd within the past 2 years, then it'll get on. The reason why I want to allow such a wide level for the deep view rating is because I want IPOs to be able to pass this, and sometimes an IPO will be able to get on here, but it won't meet this criteria.
Okay.
So I'll still add it, but IPOs get a little bit more leeway. So like ASPN wouldn't make it. JD is on the list. LAUR doesn't make it because of the rating. So I still go through this one at a time.
Right. Okay. So that's exactly what I was going to ask you. Once you've built your universe, once you've done your screens, you create an output. That output is all merged into one list, which you call the universe list. The universe list, then do you purge using screening techniques or not?
It's all manual.
Oh, okay. So the 300 or whatever, you have to manually go through each individual one.
Right. So Deep View makes the process a little bit easier than what MarketSmith did. And the reason why is because of this filter right here, the Weinstein stages. So I'm able to see what's in an uptrend versus what's not in an uptrend very easily just by this number here. So right now we're on the universe list. I'll sort it by this, and I'll just scroll down the whole thing to see, well, how many stage 2 uptrends are there, and I could click on this and see, oh, there's 213 out of 269 stocks on the universe list that are in stage 2 uptrends, and everything else down here is going to be stage 3 or stage 4. Great. Now, if I want to start pruning the list right away, I could start coming to the stage 3s and seeing, well, what needs to be kicked off, right? Because if something has less than an 80 and it's in a stage 3, I'm kicking it off.
An 80 what?
80.
Of which criteria?
Of the deep view rating.
Okay.
right? So sometimes things will get close, and then every once in a while, right? So this one here, the deep view rating must have changed recently, but I'm going to keep this one on because it's close to climbing back above the 50-day moving average. It's the first time that it's getting below that level. So if it's still poor next week, I'll kick it off.
Mhm.
Right. So you can see that it's like there's rules involved, but it's not like a written in stone kind of thing. Like with this, it's more okay. Like there's a little bit of leeway, or at least I'll give it a little bit of leeway.
Right.
Yeah, and sometimes I'll go through stuff, and when I go through it on a Friday, sometimes ratings might update overnight and be a little bit different. So for right now, I'm going to keep the list as is, so that way it doesn't upset anything. And plus, my routine's already done anyhow.
When you switched over from market search to deep view, did you take advantage of that change in order to modify your criteria for the screens?
No, what do you mean?
You had in market search 7 or 8 screens, right? Or 8 or 9 or
Yep.
10 or whatever. When you transferred that to deep view, did you modify those screens?
Slightly. There's slight modifications to the screens, mostly because some of the criteria isn't exactly the same.
Right.
Right. So, for example, let's pop open the sector leader screen, edit the filter. So this stuff pops out. So it's fairly close, but it's not exactly what was in the market surge one.
Okay. But you haven't added additional criteria in the filtering.
I don't think so.
Okay.
I don't think so. But the thing with all these screens, it's you do what we're aiming for is to get a relatively specific crop of stocks, right? So this screen here, it's looking for very high earnings, high growth, and a strong group rank. Like this one here, accelerating earnings and sales. This one is looking for accelerating earnings and sales. So it's like looking for these specific fundamental things that are apparently fairly hard to achieve in together, right? Because right now only 4 stocks out of all the stocks in Deep View are passing this particular screen.
Mhm.
But once you have your screens, it's running them consistently and building a routine out of this that helps you spot things. So week to week, as you're running the same kind of screens, building the same kind of universal list, doing the same routines over and over again, that's when you start to pick up on things like, oh, you know what? All of a sudden, there's all these industrials coming onto the list. Oh, that's interesting. And things like that will catch your attention. Oh, wow, look, all the semis seem to be dropping off all at the same time. Maybe I should stay away from semis. Or maybe it's that, oh, all the semis, yeah, that they had a tough week, but I noticed they're all sitting on the 200-day moving average. Maybe they might bounce.
Right.
And that's the kind of things that experience teaches. But
Okay.
this kind of a framework leads to that kind of experience.
Okay. Have you modified your screens through the time, or have you always kept them the same?
Yeah, the screens that I was running in Market Surge are the same screens that I was running when I first got them. Like I think I started with Market Smith in 2011 or maybe 2012.
Right.
So So yeah, more than a decade, and then tried to replicate them as best as I could in DeepView.
Right. Okay. So that video you made in 21, you've kept exactly the same criteria then.
Pretty much, right? I would say that 90% of the stuff is the same. And the only reason why there's differences is because there's some things that Market Surge has that DeepView doesn't have, and some things that DeepView has that maybe Market Surge doesn't have.
Okay.
One of the things that I didn't talk about in that video that I plan on making another video for is the daily screens. Right, so the daily screens that I run, like that were the utility screens. Do you remember those? That I would run which ones are up on volume, which ones have declining volume, which ones have relative strength, and all that. Well, in DeepView, they actually give you a way to filter for that without needing to run screens.
Yeah, the columns.
So, yeah, so I've been using this, and it's been great. Yeah, I'll just sort by each one of these, and then I know exactly what fits that criteria. And I'll just go down the list and see, all right, well, what's setting up in a pattern that I recognize.
Yeah.
And the reason why I'm able to go through it quickly and see use the term pattern that I recognize is because I've studied how many thousands of charts through the years. So for anybody that's starting out, and I know that you're fair. How long have you been doing this? You've been doing this for a little while.
A little while, yeah.
But for somebody that's maybe watching the recording of this later on and is brand new, you want to just start with maybe 1 or 2 patterns, 3 at the most. So that way you start to pick up on what you're seeing, you know what you're looking for, and you're able to filter out all the other stuff fairly quickly.
Yeah.
All right. Any other questions you have on Universalist?
Your daily screening still relies on the universe list you created at the end of the week. Is that right?
Yeah. Well, once the universe list is set, I'm not adding anything to the universe throughout the week.
Right. So the universe list changes week on week, basically.
Week on week.
Fine. Okay, that's good. And one criteria I tend to use is the WCR, which I think is a nice tell.
Yeah, that's great. And DeepView even lets you put it over here in the data panel, which is nice.
Yeah, I put it on the columns, so I can actually put in WCR in there and then just hit the button and see which is the strongest at the end of the week and things like that, or which are the weakest. You've got what, DCR there, yeah?
Yeah. I could probably eliminate some of these columns at this point. I've had DeepView for a couple of months now. So at first, I like to put everything in the kitchen sink in here to try to figure out what I like, what I don't like. And DeepView adds features all the time. So so this will evolve. But yeah, like daily closing range in here, I'm not really using it all that much. So I could probably get rid of this column and start to clean some of this up. Though the ones that I really use are the group rank, today's group rank versus last week's group rank. And so what I'll do and I'll use this when I'm building out the sector leaders. So I'll sort by group rank and just compare. Well, okay, here's the top 20. Now, which ones are rapidly improving? So this one here, in Airbnb is in a rapidly improving group, right? 36 to 21. So that's one that I would want to flag and go through that. This one here, coin, jump from 147 to 23. So all things like that start to catch my attention because maybe they're catching some wind from the group. And then I'll take a look at the chart, and if the chart looks like this, I'll leave it alone.
Yeah, exactly.
Right, I'm still looking for the patterns that I want to look for. Something like a big jump in group rank is a boost to a pattern that I'm looking for.
Just out of just out of interest, what stage is Coin?
Let's see, probably 3 or 4.
I was going to say that looks
4.
dreadful. Yeah, exactly. That just summarizes the chart, basically.
Yeah, and it's not to say that, oh, well, somebody might come along and say like, well, Coin on Monday jumps up to 240 and I missed it. I should have gotten in there. This is a game of odds. How many of those charts are going to do that?
Very, very few.
Right. And so we want to get the odds in our favor, and everything that we're doing is pointing towards getting the odds in our favor. And that's why really the routine more or less starts with the universe list and running the screen at the end of the week and then building on there.
Okay. That's curious because I have built 2 or 3 screens, but I tend to be perhaps too restrictive. So maybe I should, widen the net a bit more.
Yeah. Running these screens takes me no time at all, really. Like if we just go back through the screens for a second, and you have deep view, right?
Yeah. No,
Yeah,
but the thing is that it's not running the screens. It's actually getting to a final definitive screen, which you say, yeah, fine, that's it, set in stone. It's that process of getting to that definitive screen or screen.
Well, what's the definitive process? Well, tell me more about that.
No, what I'm saying is, for example, I have, I'm going to have to change it, obviously, 3 different screens, which I was using. But the criteria at the end of the day, it's probably too restrictive. So what I'm coming up with is like, 40, 50 stocks, and that's it, which is very limiting. But it meets my criteria. But back to what I asked you before, why not put it all into one screen and run one single screen with all your criteria? And you just said it, it comes out with very little stocks. So that's why I'm going to have perhaps rethink my screening process and widen the net a bit more.
Right. Well, like you could have, what I have is 9 fairly narrow nets. And by having these 9 fairly narrow nets, I'm able to build a universe list. Right? This one here, only 1 stock passed it this week. Right? And then you might start to think, well, I'm only going to get 50 or so stocks every week. And maybe, how do you, if I was only going based off that, this one has the most at, well, what is that? 32. But even if I took every single stock on this one, we'd still only have a list of probably about 50. So then what? What's led me to a list of 270 names versus 50 is that there's one set of criteria to get onto the list, a different set of criteria to get kicked off the list. It's a little bit different. It's a little bit harder to get kicked off once you're on. It's difficult to get picked. It's difficult to make the list. It's also difficult to get kicked out.
Right. But what I don't understand is if you were to take the sum of all the stocks in all your screens, you just said you get to about 60, 70 stocks, but your universe list is about 280.
Yeah, that's what happens. Well, when you've been building a universe list for more than a decade.
Right.
If I was starting from scratch, yeah, I'd probably only have 50 names or so with this process, 50, 60 names.
Right.
And then it would be adding other names over time. And also part of the universe too is the occasional name that doesn't pass anything, but I still want it on the list, like Tesla, like Apple. Right? I don't think Apple passes any of these screens. Well, what's Apple's rating? 59. It's still on the universe list. I want to keep tabs on it. Does Netflix pass? Think nope. Still want to keep tabs on it.
Mm-hmm.
So, and it's okay to have a few names like it, but if you find out that, well, like, you know, half my names on the universe list are just random things, well, maybe we want to be a little bit more restrictive then.
Yeah, exactly. Right. Okay. And do you compare your universe list week on week in terms of which stocks come on or come up or go or get ejected from the list?
Great question. Not specifically.
Right. Okay.
Not specifically.
So what I mean is, for example, there could be stocks which come onto your list. They're there for 3 weeks. They leave the list, and then 3 weeks later they come back on it again. That same stock. It might, be on, be off, on, off. Is that something you monitor or not?
It's not something that I actively track, but it's something that I would pick up on. And the reason why I would be able to pick up on it is because I'm doing the same routine all the time.
Right. Sure.
Right? Like it's the same thing. Like if you're driving to somewhere that you drive to every day and you could do it with your eyes closed. If something is weird, you'll pick up on it right away. It's not that you're looking for that weird thing, but because you've driven this route so long that you instantly know that something's off.
Okay. No, well, you got the other side of the coin, which is some people are so on autopilot they don't notice it. You know what I mean?
Yeah.
Okay. Right. I'm gonna have a rethink of my my screening process then. All right. So what's on your list these days or this weekend?
Did you see the weekly game plan video?
Oh, hang on. Yeah, no, I didn't see the video. I was looking at the list. Hang on a second.
Yeah, there was a name that you said that you wanted to take a look at. We can take a look at that one.
Yeah. And that's well, I'm glad you got VITL on your list because that's something which I've been holding for quite a while now. But there was one which cropped up on my list, and I thought, that's interesting. And I bought a little bit of the stock about a week ago. I'm still holding it just to watch it. It's BYRN, Burner Technologies. These are like a taser type product.
Oh, I've heard of this.
I've
heard of this. Yeah, it's a non-lethal gun.
Exactly. And I just saw the chart the other day and I was intrigued, really intrigued. So I got some stock about a week and a half ago. I just thought, I'll just keep a tabs on it. And it's looking interesting.
Yeah, you've got me interested now too. Oh, look at that. Is that on the universe list? It might be. One of the great things about Deep View is that they give you these little circles that you could see, like if something's a part of this list or that list, right? Like these special Deep View lists, like a purple, a blue. So I made the universe blue, but
blue sky.
yeah, but it's difficult to sometimes see if something's on the list or not, because it blends in. Yeah, there it is. It is on the list.
But Mike, why don't you try, because you've got it on TradingView, why don't you try it on Deep View as well, the dark mode?
Dunk mode? What's dunk mode?
Dark mode.
Oh, dark mode. No, the reason why, I don't know. I at least for now, I like to keep this. It makes me feel like I'm in a different environment. It's giving me a different look to
A
it.
different world.
Yeah, and some every now and again I'll catch something that's a little bit different in one versus another, and that little tweak in perspective is useful every now and again.
Well, dark mode is saving my eyesight in Deep View, I'll tell you.
All right.
Really is. But I like it because it looks sharper. It really does.
Yeah. So here's burn. Yeah, that was a
What do you think to
really
it?
great move. I want to take a measurement on this from
I mean, it came down and tested what? Is that the 50?
the 21.
21. There you go. And there was some decent volume on Friday. I mean, the thing is, I was away Friday. I was away all day. I was out all day, so I didn't even look at anything until the end. But I was intrigued by these 2 days of volume.
Yeah. So so you have earnings coming up in a couple of days.
Yeah.
So, well, what's your question?
Well, what do you think to it? Because I mean, the setup looks very interesting. Apart from the fact you've got earnings 2 days down the road. I mean, I only got like 20 shares in it just to keep tabs on it. But it certainly looks really intriguing, this setup.
Sure. If I had it, I'd be holding at this point anyway.
Mm-hmm.
Right? Earnings a couple of days away. A lot can happen between now and then.
Right.
But if it looks like this, I'd be a holder.
Yeah. I mean, like literally, I've got 20 shares. I mean, I didn't want to risk anything major here at all. But it's 16.54 was my entry price. So I'm not going to lose
probably
much.
take a quarter off right here. Come to think of it, right? Because one, you have that sharp move up, and you're right by prior resistance. So after a sharp move, you could either blast right through, or you could consolidate a little bit. And with earnings right here, you could do either, really.
Yeah.
So that's why I like to take a smidge off when I'm getting so close to the resistance level. And then if I have my stop right at around break even, the rest, it could do what it's going to do, and I'm not sitting here counting my pennies.
Yeah. I mean, have you looked at the weekly chart on this thing?
Yeah, the weekly chart looked pretty good too.
No, but exactly. Went down a long way and coming up quite decently.
Yeah.
Is that something also you can look up in DeepView funds? Because that was something you could look up in Market Surge.
Yeah, no, unfortunately, they don't have that yet.
Not yet. No, that's one of the things they're still going to figure out.
Yeah, the best that they're able to do it, and this is interesting too, with the insider buys and insider sells.
Mm-hmm.
So seeing insider buying taking place over the last 24 and over the last 12 weeks, that's fairly positive too.
Yeah.
And so that's it's obviously not the same thing as seeing increasing fund ownership, but it's in the same genre.
Yeah, I get you.
Yeah, that looks fantastic.
Yeah, it certainly piqued my interest.
Yeah, there's been plenty of really good ones lately.
By the way, Reddit really took off.
Yeah. Yeah, Reddit is Did you see what I had to say about Reddit?
No, I didn't read it, but I mean, I'm in since
Oh yeah, you
48,
didn't
since
see
way back
the
when.
video yet. So the thing with Reddit, right? There's something that O'Neill said, that when you get shaken out of a stock and it sets up again, you should go back in and buy a little bit more.
Which is
And
what people don't tend to do, right?
which is what people don't tend to do. And it's what I tried to do a long time ago when I first read it. And as a rookie, you make all sorts of rookie mistakes with that, and you get sliced up, death of a thousand cuts, because you're just making mistakes that you don't even realize that you're making.
Yeah.
And I was just like, screw this rule. And then
Yeah, you were
when
probably
I
not the only
looked
one
at-
who said that either. You were probably
What
not
was
the only
that?
one who said that either.
Sure. Then when I looked at this and how I ended up playing it, I followed O'Neill's rule to a T, because I bought it here. I ended up getting shaken out of it based on the danger signals, 3% loss. And then it sets up again, even better than before, because now we've got the handle. Buy it back, and I looked at my sizing, and it actually was a little bit more, not because I was trying to get back at the market, right? And that's how I took it way back when, but because the setup actually improved and conditions improved. So,
You mean the risk to return improved?
yeah,
Right.
yeah, all that stuff improved, and so here we are. And so I ended up taking my first scale out a little bit early. I took it, well, when I saw price get to 72.50 towards the end of the day. And the reason why I decided to take it there instead of a little bit higher, I think I had planned it at like 74 and change, is because when you get these big one-day jumps, just like how we were talking with Burner, sometimes you get a little bit of a pullback and you don't know if price is going to keep on going or come right back in. So because it's had such a big move, and I was fairly close to where I would be, like the scale out was like right up here. It's just like, all right, close enough, I'll take the scale out. And also there's a resistance level that it was just getting through from back. Picture that as a straight line. But yeah, it just got above that resistance level. So does that count as resistance later on? Maybe it does. Volume, the action is fantastic, right? You have this move up here. You have volume increasing, price pulls back, volume decreases. Then you get the breakout. It's exactly what accumulation is supposed to look like.
What I like also is like and this is a bit Darvis, I suppose, but it's like created like 3 or 2 like boxes around the 55 to 60 level. It created like a mini flat base there right in the middle where
I'm getting the box tool.
Exactly, get the box tool. 55 to 60 exactly. Then it ripped, then it went to 65.70, and all-time highs is at 78, so it's not far off.
But so like you're looking at this is a box.
Yeah, 65.70 area.
And then this is a box. And then
the up move I'm not considering as a box. I'm just saying that.
But it might turn into a box.
Well, maybe, yeah, could do.
Something
but
like
that could easily go to 78, I reckon.
Yeah. And so Reddit's very interesting. Like if I was just looking, and I actually saw Ropel tweet about this, and
the golden goose of capitalism.
That's something that he's pretty famous for saying a lot.
That guy.
Yeah, I probably have a few Mike-isms too that people could point at, and we'd all have a good laugh. But
you mean like your market rap? You ought to call that the "We have a lot to talk about" video.
Oh man, maybe next time. Hello, everybody. Welcome to the. We've got a lot to talk about today.
Maybe
All
you should
right.
say one day. We got nothing to talk about.
Yeah, I should really put down my coffee before I'm listening to you. But one of the things that Jim was talking about here was that the earnings and the sales really stink.
Yeah, I agree.
But it's not trading based off of that.
No.
So this is one of those scenarios where I Can Slim is my foundation, but I framed Eagle the way that I did to be earnings or sales or projections.
Right.
So when you don't have the earnings or the sales, well, why is Reddit moving up? Well, it's got to be the projections.
Yeah, and
And
that's
part of
exactly
what the
it.
projections are for this, you take a look at the annuals and look at this.
Yeah, exactly. I mean, you're going from negative 4.6 this year to flat next year.
Yeah.
And then it just goes zoom.
And so part of it's that, part of it's also knowing this is where I know a little bit about the story.
Mm-hmm.
Right? And it's not that I'm even a Reddit user, but because I'm in this social media influencer space, that I know of Reddit and how important it is, and that it's in many ways has replaced blogs. Or when people are going to start a business or try to start up a blog rather than building a WordPress site. I don't know if are you familiar with WordPress?
Yeah.
Or what that even is? Yeah. So they'll start a Reddit and right there because that's where the people are. That's where the attention is.
Substack is another one.
Yeah, that's another one too. Does Substack have a stock?
No.
Not yet.
No. Well, yeah, not yet.
But yeah, because so yeah, I think that Reddit's gonna do some pretty good things, and we'll see. But by trading it in the way that I have here, where they take some off, get your stops to fairly close to even, right? Like I don't want to choke it off prematurely, but at this point, it's practically at break even, right? Well, what is that? A 1.5% loss. I've already taken off profits at a 7% gain. So it's if it does turn around, I'm probably out break even. Now just let it work, let it run, let it do what it's going to do. There's a lot of flexibility in here.
Well, that's what I've been doing with it. I mean, I got in April, so I'm just letting it run. I mean, right now I'm up 50%.
So you got in back here and held through all this.
Yeah. I held through all of that. Exactly. I got it at $48.
Yeah, and this is why everybody needs to learn how to trade their personality. You and I are both doing well on this, but there's no way I would have been able to hold through this.
Yeah, exactly.
Right. And the reason why I wouldn't be able to hold through it, a lot of it has to do with it really all boils down to beliefs. And I have conflicting beliefs that wouldn't allow me to hold through that. You don't, which is why you're able to do it.
Yeah, I have more patience, more I like the longer time frames. I think that daily charts, the volatility which that adds, makes you perhaps come to the wrong conclusion and perhaps get out of a stock earlier than you really should if you're looking to hold it for a bigger win.
Well,
but that's my belief.
Yeah. So far, Duolingo hasn't done anything wrong
No.
it would kick me out. So I'm comfortable holding this for much longer, right? Like I've held this for like a month and a half. So if a stock is behaving well, I'm fine to hold it. So it's not the length of time. It's not being patient. It's when I start to when I have rules that I'm trying to follow, and then I see breaks of certain rules, then that's where there's the cognitive dissonance happening, and I just can't hold through it, because if I try, and even if I tried to, then I end up making a mistake at the worst possible time. So better to adhere to the rules that I've set, better to trade it in alignment with my beliefs, and then then there's no problem.
Yeah, I've got quite a few like that. I mean, app, WGS, VST.
Oh
you know,
yeah,
they're all-
we're both trading the same stuff.
App is a stock I've had since, I'll tell you when. The price, $73 I paid for that.
Yeah, your thing is that you've got to start learning how to trade with some size.
Yeah, I agree. Believe in the system.
Well, and it's not, it may not even be like put in, you want to take a look at how much you start with. You want to take a look at opportunities to add. Did you add to this at all? Or no?
No, I didn't. I got it in August with that pullback, with the market shakeout.
Yeah, back in here.
Yeah. But I mean, the other thing is also that increase, which we've been seeing over the past three or 4 weeks, it looks pretty scary that it might roll over. I mean, that's what I thought.
Well, that part of that is because, well, you're looking at it relative to where you're at, and you know, well, where's your stop?
Oh,
have you taken anything off?
No. I'm still riding it.
So that's part of what can happen too, right? So so I have this big win. When it's time to press, it's like, uh-oh, it's getting extended. I don't want to see it roll back over and give everything back. So this is part of what's led to the rules that I have, where I'm thinking, all right, I kind of want to have my cake and eat it too. So I need to have ways that I'm going to sell on the way up. And even though we're trading different time frames, you and I, you could still have certain rules that say that, all right, when price gets to X percentage gain, I'm taking something off. Or here's a type of setup where if it does this, I'm going to add. For example, like one technical setup that I see right here, like this is a good pullback right here.
Yeah.
And the reason why is because prices already run. Price then starts pulling back. Price is pulling back on lower volume. It's tight and controlled, and it's around the key moving averages, the 50, the 21. And over here, when it starts to flatten out in that way, you can have a stop just below the 50. And for you, the 8% is in what you're looking to give a stock, right? For me, that's a little bit wide, but there's even potential shelf right here where maybe this would be one that I would set an alert on and see how it breaks out and try to get in that way.
I remember that day actually. I think it was Merrill Lynch, well, Bank of America, Merrill Lynch, whatever they call themselves these days. They came out with a note saying strong buy, 130 price target, I think they said. So that's why it just suddenly took off for about a week and a half, and it just zoomed straight up.
Yeah, what are they saying now?
Well, yeah, exactly. There must be something behind that. But where is it now? Almost 140. I mean, wow.
Right. And so you're in it from this whole thing. I just started a fairly decent sized position up here. Right. How much did I put into this? Somewhere in the ballpark of 10% or so.
Mhm.
Which still isn't a crazy amount. Right. That's only going to be about 0.5% if I lose.
Right. Where did you put your stop?
Yeah, let's take a look at app. So here's app, the sizing on app. Yeah, just under 10% with 0.5% risk on it.
Yeah, 8.6. So your stop is at 125.40, which is the
Yeah.
low of what? About a
This.
week ago. Okay. Okay.
And the reason why I haven't raised it yet is just in case if we get one of these dipsy doodles on Monday, like let's say all of a sudden the market opens down here and then you get an upside reversal. I don't want to be shaken out on something like that. I want to give it enough room for something like that. So that's why I'm keeping my stop down here for now.
Right.
Yeah, that stop should be the place where the chart gets broken.
Okay.
I want to get my stop to break even as quickly as I can, but I still want it to be in a place where the chart gets broken.
I was going to say, because you're at close to 5%, which is your first profit take, right?
It's varies sometimes. So when market conditions are stronger,
Yeah.
which they are right now, and I'm getting more into the habit of doing this too, allowing price to get to 2R, roughly 2R.
Okay.
And most of the time that's around 10%. Sometimes it's 12%. Sometimes it might be 8%. But generally speaking, about twice what I've risked. When it gets to twice what I've risked, then start peeling off. So that way I've got more of the position making the bigger gains. And then that's what's paying for all these the little losses. In the video, I actually go to the close trades, right? And I pointed this out too because, I used to go through my past trades and start to beat myself up because I would look at, well, here's the last closed trades, right?
Mm-hmm.
So it's a sea of red.
Okay.
For the closed trades, and it's just like, man, I must suck. So what's the problem here? Well, need to dig a little bit deeper. Trades that are losers get closed a lot faster than trades that are winners. So I've got all these trades, Duolingo up 30%, Palantir up almost 15%, SFM, all these ones that are doing very well, that are doing the heavy lifting, but they're older positions. So I'm still holding them.
Yeah.
And that's why the portfolio is still doing well. Then I take a look at the closed trades again, and it's like, well, how much did I actually lose on these losers? All right, here's a 3%. That one's almost 4%. That one's almost 4%, 1%, 0.5%. So most of these losses are tiny little nothings.
Yeah.
So that's fine.
Yeah.
If I could have a 1% loss or even a 3% loss or a 4% loss and have stacking 15% gains, 30% gains, I'll do that.
Yeah. I mean, in the end, the numbers stack in your favor.
Yeah. But you never know which one's going to produce the 30% gain and which one's going to produce the 4% loss. So that's why our job is to be the gatekeeper.
Yeah.
Right? Who gets to enter the arena? Only the best trades. How do we know which ones are the best trades? Well, we better have a criteria for how we're going to figure that out. That's where the model book comes in. That's where having your universe list comes in, because only certain things are going to be able to get into your universe.
Yeah. One thing which I'm looking at on the Open Trades tab,
Mhm.
app, potential reward 50%, R to R 8.69. But I'm looking at your target. You're targeting $200. But if you look at the chart, I mean, $200 is way up there in the sky.
This is a high type flag.
Yeah, but it's 140. I mean, 200 is another 50%
Yeah,
on top
that's
of.
the targets for when you have high type flags, or actually in this case, it's a power play. That's the target. It's not the 20 to 25%. Now, the reason why you have the high type flag and the power plays is because they're capable of making much more dramatic moves. And so the
Right.
target is able to be that much higher. Now, that's where it that's where it might be able to go. But I'll be selling long before I ever get to that target. Like that's not something where I'm just looking to, all right, I'm gonna sit on my hands until it gets to 200. I'm gonna be peeling something off over here. Like my first target is at 149.90, I believe. Verify that. 144.90.
Mhm.
Let's fix that on here. And 144.90.
Yeah, and what we were talking about before Reddit, your target is, I was just about to say, well, I was saying before that it could get to 78 again. You're targeting 77.90 as your first target,
Yeah.
which makes sense. Makes a lot of sense.
Yeah, like figuring out when to sell, like it's why I like to have multiple ways to figure out when to sell. But the basics have to do with, where is there some sort of hurdle in your way,
Mhm.
right? Like a prior resistance level. Part of it has to do with your own mathematics, right? Look at how much you're risking. How much when you start to take off has to make sense relative to what you're risking. You want it to be about twice what you're risking. That's
Mhm.
going to keep you profitable. Part of it's the market, because part of it is if everything's running much further, then you should be letting your trades run much further. Otherwise, you're kneecapping yourself.
Yeah, I agree.
Yeah. So
I agree.
right now I'm fairly heavy.
How much exposure
I
have you got?
was getting light, and then I was ramped right back up this week.
How much exposure have you got right now?
Tiny second, 77%.
I thought you were going to say you were on margin.
Pretty close.
Well, come
Pretty
on.
close. So, well, one of the things that I mentioned in the video that I've noticed is that we keep on getting early week sell-offs, and then end of week rallies.
Another thing I noticed actually, first week of the month, the past 3 months, have been a sell-off week.
Really?
Yeah, if you look at, I think NAS Composite or even the S&P, I think you'll see it.
All right. So
First week of September was a sell-off. First weekend of August was a sell-off. First week of October, well, this week doesn't count as the first week of October because it started 30th September. That's the trick there. But it was down slightly. Or was it up? I can't remember. But it's marginal. This week has been marginal. So maybe it's maybe it's buck the trend, this one. certainly the data on Friday was encouraging, the jobs creation. Now, whether they'll reinterpret things over the weekend and Monday they say, oh, no, it means that we can't see any more Fed rate cuts going forward. So blah, blah, another wall of worry. But I mean, the market reaction I thought was excellent in the small and mid caps, definitely. I mean, the mega caps, nah, they didn't do that much. But the small and mid caps really took off. What's weird though, I'm seeing the 10-year yields increasing again, which is a bit concerning, I suppose. But we'll see. We'll see what holds. And Tesla has got its robo taxi day on Tuesday, I think it is. That's going to be
robo taxi.
Yeah, apparently they're going to be launching their robo taxi service on when's the 10th?
It's 10th.
Wednesday, is it?
Thursday.
But
yeah, I just saw some video on X of some kid that had a Tesla, and he's like, "All right, I'm in a Walmart parking lot. I'm gonna tap a button, and the car's going to come to me." And so he rolls down the windows, and there's nobody driving the car, and it's coming to him, and like everybody's getting freaked out, like, "Whoa, what's driving this car?"
Knight Rider.
The car did a good job of getting to him, and somebody else was backing out. The car stopped right away. And the car's moving at like 6 miles an hour.
That's Knight Rider.
Yeah, it's wild stuff, man. Wild stuff.
Have you seen the other video? There's a video I saw.
That show, Knight Rider, with Michael Knight.
Did you see the other video? I saw another video on Instagram of a woman who's parking her Tesla as well. She gets out of the car, opens the garage gate, and the car sort of starts backing up, maneuvering, sensors. And then it decides, no, it can't park. So it pulls out into the street and then it just takes off.
Yeah.
And the woman running down the road behind it.
It's just like, you know what? Enough of this.
Maybe it decided it needed to go and recharge its batteries.
Yeah. Oh, man. Yeah, man. Maybe we don't want that much autonomous cars.
No. No. The robot film freaked me out enough when I saw that with Will Smith. That was freaky. But anyway, well, thanks for the update. Is the video out yet?
Oh yeah. The whole thing is posted.
Okay.
I posted that last night.
Okay, because I was seeing the spreadsheet. I didn't see the video. Okay, well,
let's verify. Right, because we were having some problems with that, and it looked like it was posted yesterday. Then we'll see if it's still there. Yeah, so there's the playbook.
Yeah, there it is.
There's the report, and yeah, here's the video. So it's a longer video, 48 minutes.
Whoa, value for money.
On 2 times speed.
We're getting bang for a buck, right?
There you go. But look, you even get timestamps now.
Yeah, that's cool, actually.
Yeah, it's great.
And what I like also is, and Daniel mentioned this a few weeks ago, the lessons you come up with for each individual stock when you put underneath.
Oh yeah. All that stuff is great, and it's great to get feedback from everybody, because what I'll do is I'll take your feedback. I'll still record the videos the same way that I record the videos, but I'll take the transcript, upload it to ChatGPT, and I built out a GPT with all of your suggestions and what you like, and then it'll create the report from my transcript based on what you guys are asking for. So with the lessons and all that, I told it, look, every time put this. And so it'll take just structure what I'm saying in a way that's very good for everybody.
That's good.
Yeah.
You're getting the hang of ChatGPT then, yeah?
Oh, it's such a great tool. Such a great tool. It's great. It's a great sidekick. It's a great assistant. Right? Like you don't want it to be in charge because if you just let it do whatever it's going to do, like you need to be able to fact check it, right?
Mhm.
So every once in a while, like it'll be like it'll say something and it's not quite right. But if you know what you're doing, you'll be able to catch it. If you don't know what you're doing and just take anything verbatim, then that's when you get into trouble.
By the way, have you seen that Google has launched its Gemini system as
Yeah,
well?
I haven't played around with it.
No, I just saw it. It's appeared on one of my icons when I go into Google, and I was
Yeah,
thinking,
you
well,
can't get rid of it.
yeah, exactly. But I'm just wondering what that's like compared to ChatGPT. By the way, these are the guys who raised some more capital and they've suddenly doubled in value in the space of 6 months, isn't it?
ChatGPT?
I think no, OpenAI. Sorry, OpenAI.
Yeah, OpenAI. They're not publicly traded, are they?
No. But I mean, they did another round of funding, and every man and his dog was putting money in there. And Nvidia's in there, Google's in there, Microsoft is in there, and apparently the company now, I mean, the implicit valuation is 157 billion, and these guys haven't come to market yet. So when they do, God knows what that'll be worth. But yeah, and that's doubled in 7 months, I think.
Well, sure. It's changing the way we live, work, and play. It's
Well, I'm doing the same things as
exactly the
always.
kind of. What was that?
I'm doing the same things as always, so it hasn't changed me.
Mhm.
But anyway,
All right. So,
okay. Well, thanks for that.
all right. You're welcome.
Have a great
And
weekend, and we'll
thank
catch
you.
up.
You too.
I've got to. By the way, did you upload the video from the other night?
Oh, so that one's just going to stay as the webinar. So, did you sign up for it or no?
Yes.
Yeah. So you should have gotten an email that will let you go to the recording.
Okay, I'll listen to that sometime this weekend then, because I'm interested in that as well. Okay,
All right. Cool.
that's great. Well, have a great weekend.
Thanks. You too.
Take
Take
care.
care.
Bye.
Bye.